Good weekend, all. Ira Epstein with your weekend edition of your agriculture update for Friday, the 31st of May, 2019. Well, the news of the day was President Trump's proposed tariffs on Mexico, of all things, and it has to do with the Central American people that are migrating through Mexico, either illegally making it across the border to us or getting right up to the border wall, and the president wants it stopped. So what he said was June 10th, 5% tariff on everything coming out of Mexico. Of course, the automakers get hurt, but grain also gets impacted because we do a lot of grain trade with Mexico. But think of all the other products that are coming there. Think of the ramification. If you had a company and you were thinking of moving production out of China there, I can go on and on. What's this have to do with agriculture? Well, a lot, because it impacts the dollar, it impacts how the stock market's going, it impacts world trade right around the corner. And you can see that the grains are down, but I question if the grains were down just because of the proposed tariff, which I personally think Mexico can completely avoid by putting in a game plan, number one, to stop this from allowing at their southern borders. That's all they have to do, stop the people from coming through, and I think this problem actually dries up. It sounds simple. I don't know what the logistics are. But I think grains, as I was starting to say, could correct anyways. They've had a weather market run-up. Now, you back off on a day like today, and then you're like this over the weekend wondering what the weather's going to be. Is it going to dry out or get wet again? And that's where we're at in a number of the grain markets right now. When we come to a monthly area chart of closes, the bias is still down, and for the month we gained 4.75%, about 36.5 cents. Put the market up around the 877 level on the front contract, and that gives a nice bounce off of where we had been, which, as you know, if you go to the weekly chart for this market, of beans, you were down to 7.80, and you're $1 higher basically at 877 3/4. Come on, that's pretty big on a weekly basis. The resistance of the market is right through here. This whole area that you've got, you've just entered the bottom part of it. On the longer term chart, until you take out 907 1/4, you still have a pattern of lower highs and lower lows. Simple as can be. You've retraced from this breakout point all that you lost, and you've come right back to it. When you look at where the market's at on a weekly chart, you finished at 877 3/4. The 18-week average is 878 3/4, 878 1/2. You're right there. So what stopped the market is, as I so often say, and I teach in my charting course, that line in the sand. And that's what the market went back to. It is still bearish at this point. The bears, what they want to do is prevent the market from getting over on the weekly charts to 907 1/4 area. Should the market fail here and start next week down, they probably rejoice and say that stopped the rally. If you take a look at also what happened, we come back over here. You had gotten a bit excessive. You had 3 weeks in a row under the lower Bollinger Band. That ended May 10th when you had a reversal back up. Now, I don't think many people knew from that point you were going to go to the 18-week moving average, but I don't think people knew the weather. It's that simple. And that's what drove this market. It was not a market that went up on demand. It's a market that went up on weather fear, and you went up to a zone where I'm going to call the market getting pretty neutral at that point. I'll still say the overall trend is down, the bias is down, but momentum is pointing to the upside. So you've got a bit of divergence here, and I think that you have to wait and see when this market's going to let go. Well, obviously, and I'm talking momentum, it could still go higher. If you get a forecast come out Sunday night calling for higher prices again, what's to stop you then from getting into this resistance maybe as high as the 100-day average? When I look at the meal market, you went all the way back up through this area. This is what's amazing. When you see a market do this, look at how the sideways action is. From sideways action, you get trends. And what this market did is it broke out and went to the downside. Then it caught the weather spat. You went up, went to the upper Bollinger Band and that 100-day average, and you ran out there. This is a hard trade to catch. Weather markets show up out of nowhere, and they take on a life of their own. Remember that. But they typically correct further and harder than they go up. That's the point, because most times the crops have a way of coming back. There's a phase to all this. In other words, it looks like you can't get anything into the ground, then you get it into the ground. What does it look like? It can get another weather phase against it. A lot depends on how it goes. I can tell you that NOAA, the National Weather Service, is talking that the latter part of summer is going to be very good and the moisture will be gone. In soybean oil, this is still bearish. You've got the lower highs, lower lows, resistance 28.71. The market's starting to turn its momentum up. Maybe it gets pulled along with everything. We'll see. In the corn market, drama. That's the word that you'd use. You went from 335 to 438, and you did this in 1 week, 2 weeks, 3 weeks. That's how fast the weather market can move on you. And when they move without warning. They just go and you're wondering, is it real or not? Well, you're over the upper Bollinger Band. The question is, on the way back down, where's support in the market? Well, the logical first support is the Bollinger Band, just getting under it. And then if you fall from that, maybe you can get to the 18 and the 100-day average of closes. That'll be what the market looks to see. When you look at the wheat market, you didn't even get to the upper Bollinger Band. But you've got a market here that's got a pattern of a lower low, a higher high. It's got an interesting crossover where the 18 got under the 100, and then the market just looked back. It didn't get any follow through. So this was a false crossover in the market. That's a term that I like to use. I would say that the market's got problems at the upper Bollinger Band. However, in a weather market, what you count on doesn't count. You've got to leave and see what the weather does. This is emotion. That's what a weather market is. It's about the what-if scenarios. In the cocoa market, cocoa finished down for the week about 67 points, but it still has momentum up, the trend up. The market's trading against the upper Bollinger Band. I think you can see that, so it's in a resistance area. It's basically sideways action. If the market is going to do anything to the upside, it's got to close over this Bollinger Band and start pushing it out, and then it can get very exciting. You can call that a base. We'll see if the market does that. In the sugar market, momentum turned up. The bias is down since you're under the 18-week average, and the trend is still down. Now, if the market takes out this 12.13, I think that's what it is. Let me just check the number. It's 12.15. Couldn't see it that small. If it takes that out and it got to 12.13 this week, well, that could kick you up out of the downtrend into the 18-week average of closes along with the 100-week. So something between 12.43 in there. I don't think the bears want to take out that 12.15, but the market closed the top part of the day's range at 12.10. They may not have a choice. In coffee, I think you're up to an area on the weekly charts where the pros are getting out of the market. Now, boy, was I wrong on the daily charts, because I thought the 100-day average was going to stop the market after the Bollinger Band didn't. But in looking at the weekly chart, I have reason to believe that this is still a resistance. Am I bearish? Absolutely not. This is an uptrend, higher lows, higher highs, that was confirmed this week. It was the first week it closed over that 18-week average of closes, and now it is carried to that upper Bollinger Band. But my theory is that the first time you hit an upper and lower Bollinger Band is where pros take money off the table. We'll see if next week that offers any validity to it. In the cotton market, I could make the argument that the first challenge of the lower Bollinger Band proved to be a bit of support to the market. The trend is down on the weekly charts. Bias is down. Momentum is still down. This is no more than a bounce so far. And cotton, unlike the other markets, actually it's got pretty good growing weather around the country. Now, where there's annihilation taking place is in livestock. Look at these prices. They're just not giving up. So you've got the lower highs. You have an outside week down. You went right back to the Bollinger Band, so you had been under it. If you take a look here, on this close, we were literally just over it. 110.87 was the number. So you had 1, 2, 3 weeks, I believe, that you were under the band, right through there. You moved to the right-hand side. You did a little follow through and you're right back on it. This market just laying down. Wish I could tell you where it's going, but if you understand the logic, high grain price, right? What are you feeding these animals? How do you finish them? Maybe they just want to get them out of the way. They can't move the product just yet. In the hog market, should this market take out the 81.70 level, there's problems then in Wrigleyville, as we'll call it. And the reason would be you'd have a higher high, lower low. And that's very problematic, I think, for the market. Now, what did we get this week? 81.40. We took that out. The problem is in Wrigleyville. That you can't see that sometimes on these charts. You know, they look like, that's still higher. It isn't. It took it out. Momentum's down. You've stepped out of the uptrend. Now the question is support. If the market keeps falling, it starts at 74 and goes to 67. Pretty big numbers. I think we can say that we're not going to get a deal with China anytime soon. Whatever pork we were hoping to sell over in Mexico, who knows what's going to happen there if those tariffs go on too. I talk about this and a lot more in my morning subscriber video. The whole goal in the morning subscriber video is first, reinforce the technology, methodology is the right word, that I put out for you. So I'm going to cover with you charts that look like this. I'm not in them. I cover 40 futures charts and I try to do 5 ETFs at a time. The idea is to give you, as you're getting ready for your trade day, you're getting your cup of coffee, ready with ideas about the market. I start recording at 6:15 in the mornings, that's Central Time. I cover all these markets, as you can see. And I do them in the same sequence, but the beauty of what we do here is on the bottom, if you want to pull to an area, it tells you the area you're in. There also is on the side of the chart a lexicon to tell you where you want to go. So you just click it and it starts playing right from there. That's a new feature that we put in. What I do is I'm going to tell you the chart action. But what I can do in that morning video that I cannot do in these general videos, I'm able to say buy here, sell there, put a stop. I'm going to be right, I'm going to be wrong, but what if you're waiting and you want to do something on a trade? You got an idea. Well, you know, I've just seen the markets. I'm up at about 5, reading all over the world, and I'm caught up by the time I'm putting this out. I have a pretty good idea of what's going on where, and I do my best to talk about it. So what does it take for you to get involved? Well, I want you to commit. 26 cents a day. If you haven't tried it, it's for 30 days, $7.95. After that, if you want to continue, fine. If you want to stop, fine. It's $15 a month after that, or $156 for the year. A lot of people just buy it for the year and call it a day. It's $13 a month by doing that. How do you get this? Go to our website, www.iraepstein.com. Under the word education or research, go to the morning subscriber video. You'll see the pull-down menu. You can sign up right then and there. No coupons, nothing else, and you'll be getting messages. Now, the other part that comes with this is just like for your phone, you're able to get our application. Now, normally it's $40 a month. With my subscriptions, it's free. The videos play on it. Market research comes through on it. You find quite a bit all for this low price. Hope you take advantage of it. I'm Ira Epstein. You have a great weekend.